This tax loophole benefits billionaires. It costs regular Americans. It impacts our economy. Yet many Americans remain unaware. Today, we expose carried interest. This term describes a unique compensation structure. It primarily benefits private equity and hedge fund managers. These managers often receive a share of their fund's profits. This profit share is called carried interest. It sparks intense debate among politicians and economists. The core controversy lies in its tax treatment. Managers typically receive this as capital gains. This is crucial for understanding the controversy. Capital gains tax rates are significantly lower. Ordinary income tax rates are much higher. Consider this. A general partner manages a fund. They contribute minimal personal capital. They raise money from limited partners, like pension funds. The general partner then invests these pooled funds. They charge management fees, usually 2% annually. Additionally, they earn a share of investment profits. This profit share is often 20%, the carried interest. The IRS currently treats this 20% as capital gains. This applies if investments are held over 3 years. The long-term capital gains rate is typically 15–20%. The top ordinary income tax rate can reach 37%. This creates a massive tax advantage for fund managers. Critics argue this isn't investment income. They contend it's compensation for services rendered. Therefore, it should be taxed as ordinary income. This debate has raged for decades in Washington. President Obama tried to close the loophole. President Trump also expressed interest in reform. More recently, President Biden pushed for changes.
The Build Back Better plan included such provisions.
However, these efforts consistently face strong opposition. Powerful lobbying groups protect the current system. They argue it incentivizes long-term investment. They claim it drives economic growth and job creation. Opponents see it as unfair tax avoidance. They highlight the disparity for working Americans. Why should a manager pay less than a teacher? Closing this loophole could generate billions in revenue. This revenue could fund vital public services. It would also enhance the perceived fairness of our tax code. Understanding this loophole empowers you as a citizen. It highlights ongoing challenges in tax equity. Subscribe for more in-depth explorations. Understanding this loophole empowers you as a citizen. Subscribe for more in-depth explorations.